All right, so we're live, guys. Elisha, Victor, Kenny, we're live now.
All right, what's up, guys? He's Elisha here. I'm a commercial tutor for Dr. Biz Academy and also an elite tutor. Yes, I'm a gold trader and I'll be sharing my screen to do some market analysis and breakdown for gold. We're going to talk about what we're going to be seeing this coming week and I'll put up with the market conditions. All right, so I'm going to share my screen real quick. Sharing screen. Can you guys see my whole screen? Can you guys see my whole screen? Share the screen.
Um,
Is it visible?
let me check. Let me check. Hold on a minute. Yeah, we can see your screen now. Good, right?
Yeah, gold. Beautiful. All right, welcome guys, welcome everyone. So yeah, um, this is um, this is gold. Sorry, this is silver. Let me start with gold first. Sorry. Okay, so this is gold. Okay, and I'm gonna start with the higher time frames so that we understand what is currently happening. So we are all aware that as of February, or I think January ending, we saw a massive crash on gold. Okay, now over that month of January, February made a very strong bullish, push to the upside, indicating buy momentum. Okay, but now what we're seeing is something very, very tricky. Okay, we are slowly approaching a CRT on gold, which would indicate serious bearish trend over the long term. And that's facts over the long term, and it will be crazy. Okay, and this is what the money time frame is showing us. Now, if it goes to the weekly time frame, we are seeing consistent, week in, week out bearish candles on the weekly time frame, which shows that we are in a very strong bearish market conditions now. Buys are out of the window. Okay, buys are genuinely out of the window. The last time we saw something like this, this is one of the biggest bearish, between all these guys that had bearish trends here. You understand? I think this guy is the biggest. Like it's the biggest, right? So we're seeing a lot of bearish trend by us. Normally, when it becomes bearish like this, from what we are seeing from the past, okay, we normally eventually at the third week of the bearish continuation, the fourth week shows bullish pressure to the upside, which then creates a new all-time bias. Okay. Now we're seeing similar situations here. We had like three bearish candle, then the fourth one went up. Then from there, like that, we had another one here. One, two, three. After the third week of bearish bias, the fourth week takes off and goes all time from there. So we are similarly seeing the same thing. Week in, week out, we've had 3 weeks candles or bearish. So depending on how this week closes, we might get strong bullish momentum from next week if we are still within the buys. Okay, but the thing is, this is a monthly candle. This candle we need to buy so quickly so that the monthly candle does not close bearish in order for it to, if not, if the monthly candle close bearish, then we might get stronger bearish bias. So which should be more difficult to trade. So we still have about a week to go, meaning by before month end or before next month, something miraculous might happen. So the most important thing, we have to be patient with the markets because this previous data shows exactly what we can expect. Now, while we wait, okay, while we go through things, what can we expect from gold and how can we navigate these waters, right? Now, I would advise you to trade with the flow of the trend as it is. And as it is, okay, looking at it, we can see that there is strong bearish bias. First things first, like what I want to bring to your mind is the fact that, okay, fair value gap is such a powerful tool, okay, when it comes to gold. Fair value gap is very powerful too because if you look from this side, you will notice that when price got to the fair value gap here, there was a massive drop. Okay, there was a massive drop in price, right? There was a massive drop in price all the way to this level. Now there's a fair value gap here. When price tapped into that fair value gap, we are seeing massive sales. Price making a low series of lower highs. At first, it was bullish, higher highs, higher lows, but price made a change of trend here, pull back to the fair value gap, and price sold properly. Now, after the sales, okay, we might get more bearish momentum because I can see that there is more fair value gap on the upside. Okay, we have a couple of fair value gaps levels on that one that appeared here on the daily time frame, and I will tell you daily time frame respects its fair value gap like there's no tomorrow. I'll give you another instance. There was a fair value gap here on gold, right? Gold crashed down, tapped into that fair value gap, and you can see this massive reversal that happened here. Now price tapped into this fair value gap, you can see that price sold here. Now we also have another fair value gap that appeared here, indicating that price might buy to the upside. Okay, so basically tap into this fair value gap. Now two things: price could tap into the fair value gap and sell more, which is the most likely scenario that I would expect. Okay, because now we've gotten a break of structure, price might want to pull back to the fair value gap level and sell more. But this is the daily time frame. It's not something that can be done in a single day. It might take a series of days for price to, understand its bias and start reversing, pulling back like the way it pulled back here. So it might see some pullback to this side. Price might tap it to wait for confirmation on the daily time frame at intraday trend and analysis. Okay, then just like how we got it shift. Now before price sold here, price gave us clear structures. Let's take a look at what price did when it sold from that daily to fair value gap. Let's take a look at it from the 2 hours time frame and see if we can replicate the same things looking at the next daily fair value gap level that we just marked here. Now if you look closely, when price pulled all the way to the fair value gap level on the day time frame, we could see a bullish trend here until there was a change of trend. Now what I mean by this, if you go to the 15 minutes time frame, I think that's where it is most clear. Okay, you can see that the minute price tapped into that fair value gap, there was a change of trend on the 15 minutes time frame. There was also another pullback to this fair value gap level here on the 30 minutes time frame. Price tapped and price crashed. Okay, now price has created on that fair value gap level here. Similar, so basically in order to sell from this fair value gap level, we need to see a pullback, price buying towards the fair value gap level like what happened here. Then when price gets that fair value gap level, depending on the reaction and the change of trend characteristics, we might then now look for a sell. Okay, so that's how we would approach. Now in the meantime, a lot of us would want to, take advantage of the buys, then take advantage of the sells. If you want to do that, you have to really be careful. You have to wait for obvious change of trend bias, because when price was pulling back to this area, it didn't just do that. You understand? Now, if you look at here, price was bearish here, lower highs, lower lows, lower highs. Then there was a shift of trend here, SMS, right? Then price went bullish to the upside. This was the only opportunity you got to buy towards that fair value gap level. So all we have to do now to take advantage of, we want to take advantage of the sell, is quite simple. We have to then wait for a shift of trend. Okay, we have to wait for a shift in trend from here like this. All right, now good, mark that level. Next is waiting for a shift of trend. Now we just need price, okay, to go above this level, break above, pull back, right, pull back, then we get an entry from this level, something like that. Then we can now buy and hold all the way to this value gap level. But the minute we get here, everyone takes their hands off. What we want to see next is price giving us a change of trend again. Okay, price giving us a change of trend. Then if price can do that, then we can now look for sells, right, and sell downward. Mind you, there's also a high chance that price could just break above this fair value gap level and just keep heading higher. So you really want to wait for trend change confirmation instead of just selling blindly. You understand? Gold is very, very volatile, and if you really follow this approach, I think you get a better chance at the market condition. That's what I think. Now, this is for gold. Okay, this is for gold, and yeah, so far so good. This is how I would approach the market this coming week. I would simply just wait for a change of trend. If I can get a change of trend here, I would buy to the upside. If I buy to the upside, I will stop here. If I wait for confirmation, I would say if I don't see any confirmation, I will keep buying and hold my position. So yeah, that's it for gold. Silver has similar structure with gold. Okay, silver has similar structure with gold. For the daily time frame, it is full on bearish. Okay, it is full on bearish, and yeah, everybody's respecting fair value gap levels. Okay, similar to what happened with gold. Don't see, if you're trading gold, don't trade silver, because they move the same way. Meaning if you're hitting stop losses in one, you're hitting stop loss for two. Okay, You don't want to pressure your account by hitting stop loss too much, so scrap it out. Yes, so this is what I have for you guys for gold. Just take the gold and keep this one to control your side. I think this one is more than enough to take you for this week. Yeah. Do we have any questions, or do we have any thing you want to say about the analysis so far? Any question, guys? Let's see. I'm going through the comments. All right. With Trump coming up to speak, I can tell you something big is coming. Yeah, definitely. I mean, the market has to brace itself. All right. Okay. I'm trying to see if there's any question that you guys have for me. If you guys don't, yeah. Okay. No one has asked any important questions. The comments is just flooded. It's going to be hard. Lucky, can you look at any comments or questions that anybody have that I can answer before I hand over to the next tutor?
All right, let's have a look. Mm, can you hear me, Elisha?
Yeah, I can hear you.
All right. So the chat section is loading up. Um, I can't see anything yet so far from my
Okay.
end. I don't know. Probably it's network. But then, if I see as the section goes on, I would
Okay.
indicate.
So yeah, I'm done with gold analysis and breakdown. I pointed a couple of things. The daily fair value gap levels are one of the most key levels for potential reversals and getting good market conditions to trade. I want to encourage you guys to pay attention to those fair value gaps on the daily time frame. They will direct your bias and trade towards that direction. Okay, then you are good to go. So yeah, that's all I have for you guys on gold. Thank you so much, guys. I will be handing over to the next tutor. Um, Lucky, do you want to do the handover, or should I hand over myself?
Yeah, Kenny, can you hear us?
Kenny.
Hello. Okay. The boss herself is here. Actually, Queen, you can mute
Yes, I
yourself if you
can
want to say
hear you.
something.
Um,
Okay, okay.
okay.
All right. Do you want to say something before we move on?
Oh, okay. Hi, guys. Good morning, everyone. Welcome to Money Weekly Live Trading Session and Outlook. I don't know how many of you are on this live session currently now, but I believe everyone here is solemnly for one purpose to learn, and that's why we're here today. And learning is a continuous process. Learning never stops, right? You can never know too much. You always have to be student of the market, student of life. And as much as you learn, that's how much of knowledge you equip yourself with. Now, a couple of you might be here on this live session, might take it for granted, right? Oh, we come here every Monday. But you might be struggling with a particular system that is not profitable. You might be really, really struggling and you are not seeing results. You just need just one thing to click for you, and that click might be a tutor explaining a particular outlook and how he got XYZ trade and how he was able to, view the market from this perspective, the system he trades, and I was able to make money, and how the model played out probably well for him. And that's knowledge you get from that system. Confluencing it with your knowledge can give you the insight you need to make your system work. Probably your system is that system that goes halfway and come back to break even or hit stop loss, and you've been looking for how to refine it. Because one thing you should know about the market is we always must refine our strategy. The market changes. Different participants come in to the market. They all have different views on their investment. Yes, supply and demand always going to come in, but different participants in terms of investment, different market makers mindset. So you have to refine your approach. Every time you come here, I want you to have a mindset of, I want to improve myself, right? You're looking at all of the stuff big mentors. The thing is, they never stop learning. There's something they're always learning. It's either they're learning something from a book, or learning something from a podcast, or learning something from somebody that is doing better than them. So now you want to get to that level, you must. The game is tougher now because the competition out there is strong. Now, not competition in terms of your personal growth, competition to secure a spot at the top is tough, right? And for you to get to that top, you have to be extremely intentional about how much you take your growth. And this live session we do here is to empower you. We empower you in knowledge, we empower you in our skills, we empower you in a whole lot of things, right? And you might have started this week on the wrong foot, feeling like very overwhelmed of a lot of things that have happened, probably personal challenges, family problems. You are down because no finances to to support you. You're feeling miserable. You're feeling like, oh my, this life not be for me. Oh, everything just jam pack, nothing they happen. Now let me tell you something. Out of the abundance of the heart, the mouth speaketh. Right? If your heart is filled with a lot of problems and challenges and trials and temptations, your mouth confesses that the universe generates more of those and more of those experiences to come to you. Now, I'm not saying you should feign ignorance to your problems, right? Acknowledge the problems are there. If you're feeling overwhelmed, take a moment and take a breath. Look for how you can ease all of this tension out of your mindset. Write down the problems. Look for an alternative means on how to get out of those sober mood, sober reflection, those how will I put it, depressed mood, depression. You can practice different ways to come out of it. You can practice you can listen to you can listen to gospel music. You can practice um meditations. You can listen to a couple of word from different top men of God, strong men of God, powerful men of God, inspiring words, personal development audios, and all that. These are the things that will lighten your mood. They might not necessarily solve your problems for you immediately. They lightens your mood and gives you a different mindset. Your mindset needs to leave that very negative thought that you are feeling depressed and everything about you is failing. You're thinking of failing. So when you now feel a little bit better, your mindset starts shifting from there. You can approach the week with a better of mindset, a mindset that looks positive, a mindset that looks very, very positive, optimistic, regardless of how negative the glass is. You are always seeing the glass is halfway full, not half empty. This works. So if you have started the week in a very down and depressed mood, share up, because in the end, no problem lasts forever. The Bible already has promised us that the problem is but for a while. It's but for a while. There's no way it's gonna last forever. So share up and lighten up your mood and think positive. Attend your live session, go back to your drawing board, write out things. If you know it's money that is your problem, you don't have money. There's no shame, there's dignity in honor in working. Get a job, get a side job, get a job. I worked. I wasn't dependent on anyone. Get a job, get small money that will be sustaining you so you don't feel depressed. Stay off anything that looks like validation, looking for quick returns. Follow process. It's not going to come easy. It's not going to come cheap. It's not going to be fast. It's going to look as if you're taking the longer route, but that's the most sustained route. So when people are looking for validation, they are wasting their time, wasting their years. You're following due process that will lead you to a sustained path, a sustained life. You build experience, you gain knowledge, and you connect to like-minded people. So I don't want to spend too much of your time because other tutors are here. So I want you to feel super excited that you're here today. Feel super grateful that you are alive. Feel super grateful that your family members are alive. Feel super grateful that the tutors on this live session that comes to give you free tutorials, free knowledge, that they are alive. Have a reason to be grateful to God. No matter how hard the situation is, trust God. There is always a solution. He only wants you to believe and trust that He can do all things for you. Thank you for having me, Lucky, and I wish everyone a feel good trading week. And don't feel like everybody have it all figured out. No, nobody have it all figured out. There's no manual, there's no template. Every single person you see is living their life based off of what they've learned from people they feel they have success that they want to emulate. I can't go and live my path, live in emulating somebody that is not successful. I follow and listen to people that are successful, and I follow the path that they followed so that I can replicate their result. You too can do the same. Have a wonderful week and goodbye. I'm lucky. Thank you for having me.
Only one pastor evangelist.
Pretty
Up
queen.
plus one. The pretty queen, you go call them last. You get many things you go call for you call that pretty.
Oh, sorry, sir. That's how the job. I don't go jump go reach front.
You don't already jump, so you don't spoil the thing. Leave am.
Thank you.
All right, so thank you very much for that. We appreciate the admonishments. All right, guys. So moving on. Ken, are you with us? Can you hear me?
Oh yeah, guys. Before we continue, I want to let you guys know that Handtech Trader is having a 50% off on their products, and they have a daily Jordan boost, meaning that if you buy with their current coupon code with 20% off, you would have a max drawdown of an additional 2%. You know, most prop firms gives you a 10% maximum drawdown, right? But if you buy with this current discount code that is currently live on their website, okay, you get an additional 2% off, which is very, very massive. Okay, which is very, very massive, right? So yes, take advantage of this. Okay, take advantage of this. Don't let it go. Because having an additional 2% might just be what saves your account from blowing completely. You understand? This is very, very rare. I think this is the only prop firm in the industry that is doing this. And yes, you guys should take advantage of it. Thank you very much. Over
All
to you,
right,
Kenny.
Kenny, are you there?
Okay, let me add to what Elisha said about Antec Prop Firm. Now, guys, one thing I don't know if
For
Lucky, can
some
I go
reason, I
ahead?
feel
Do you
you're
mind?
talking, but we can't hear you.
Lucky, do you mind?
Yes, you
Yeah,
can.
yeah,
Hello,
go
Lucky.
ahead.
Okay, so
Yes,
guys,
you
let me
can.
tell
You
you something
can.
about forex trading, right? Forex trading is about,
Yes, you can.
okay, thank you. Forex trading is about doing the right thing at the right time.
Am I lagging?
Hope you can hear me, guys. Lucky, can you hear me? Elisha, can you hear me?
Yes, we can.
Yeah, I can hear you loud and clear.
Okay.
Yeah.
Yes, we can hear you.
Okay, so guys, sorry saying one thing twice. I want to be sure that everyone can hear me. Sorry. So what I want to tell you guys is, you have to learn to take advantage of prop firm. Don't let anybody deceive you and say your personal money is what will make you profitable and earn you that financial respect you deserve from your skills. That is a lie. I love prop firm. You have to learn to know that every businesses have the rules and regulation. Every disciplined business have a rules and regulation. Don't see prop firm rules as sabotaging to your skills. See it as a way to keep you more disciplined, to manage your finances properly. Leverage on prop firm with all your mind. I'm telling you the honest truth. Now people will tell you, why are you wasting money buying prop firm? The daily drawdown is what you're buying, which is 5%. Oh, if I put $5,000 on my trading account of my physical cash, I might not be having that same psychological, control to risk as I want to risk probably 2%. I'll be scared that I'm losing 2% of my actual cash, right? And that $5,000, instead of putting it on my trading account, I can use that $5,000 to buy over 7 or 8 100,000 prop firm. And out of that eight, three certainly or four will get to pay out. And if they get to pay out, because of the fact that I know I'm risking $2,000 or $1,000, which is 1 or 2%, I can confidently take 5%, 5% for each of the four that got to pay out in a month, just 5%. Two trades will give me 5%. Just two good trades, even if I have three bad trades, two good trades. And 5% into four is $20,000. What did I spend? I spent just $5,000 to buy eight accounts, and I've made $20,000. Guys, don't let anybody bring me to any debate anywhere. I will give you the breakdown because I've traded the two. I've traded personal account, I've traded prop firm. Personal account is quite okay. You can do that when you leverage and level up your finances. But you see, prop firm, hurry now and take up this Antec market discount, right? Don't sit on it, don't sleep on it. Don't let anybody tell you that personal trading of your $50 is better. It's not the best. Don't let anybody deceive you. I traded a $10,000 profit account. I made $500 withdrawal twice from it. That's $1,000. $1,000 will get me two Antec 50K accounts, or 100K, 150K. And those two accounts, I will conveniently make over $10,000 from it. Wisdom is profitable to direct. Antec is doing a 50% off discount. Guys, take advantage of it. If your money is not enough to get a 10K, get a 5K. Get a 5K. So many times on our live sessions, we are giving trade that plays out properly. All you need to do is attend our live session, attend our question and answer session, attend our Tuesday. Ask any question relating to psychology. There are people that will respond to you. Thursdays, we usually pass over the mic, and you can now take out your time to ask questions that is bothering you about your prop firm, challenges, how to manage your capital, and you put all of those things to practice. Let me not extend much of your time. Thank you for having me, Lucky, and I believe every one of you will take advantage of this massive discount ongoing. All right.
Hello, Kenny. Are you here? Are you here right now, Kenny? I can't hear you at all.
All right. Can I hear on the call? Elisha, are you here?
I'm here, bro. You can hear me now.
Okay. I don't know
I can hear
why we
Kenny.
can.
Oh. I can hear you and Elisha only.
I can't hear Kenny also. He said he's been speaking.
I think he should check his
Well,
mic. Maybe he muted himself.
No, I can see that his
he's,
mic symbol is vibrating, meaning that he's
Okay,
speaking,
that is
but
on.
it's not
Yeah.
just, yeah.
okay.
His mic.
Elisha, try on sharing your screen. Let's start from
Okay.
there.
Okay, let me. Yeah, yeah, that's a good one. Let me stop sharing.
All right, Kenny, share your screen. Maybe we'll hear you from your screen page. If you can hear us, Kenny, just try sharing your screen. First of all, before you start talking. All right, let's see. Let's see. All right, we can see your screen. Kenny, can you speak now? Let's see if we can hear you. I still can hear you, Kenny. Kenny, I still can't hear you though. Elisha, can you hear Kenny?
I can't hear him.
We can't hear you, Kenny. I'll be showing you're speaking, but we don't know what you're saying.
I think. Okay.
All right, guys. So while we wait for the next tutor to join, okay, I have Victor on the call. Let me quickly check if it. All right, Victor, can you hear us?
Yeah, brother, I'm here. How you doing, man? Good morning.
Yeah, we're good. We're good. So Ken is kind of having some issue with his mic. So maybe you can proceed from
Okay.
there.
Yeah, that's all right. So you're making
All
me
right, you have the
host right
phone.
now, yeah?
Yeah, just share your screen.
All right, all right. Thanks, man. All right. Welcome to the W's Forex Academy. I'm VIP, a Forex trader, a Forex tutor, a signal provider at the Forex Academy. My mission here today is to take you through the process of trading, help you get better with your trading, and give you everything you need to become better at your trading. Today, before we start, I want to say a few thank yous to the organizers of this program. Number one, the Dr. Bill's Academy in conjunction with the Handtech Market Proprietary Firm. These two have brought together something that you would literally need to pay money for. Because the sponsors are sponsoring, we're required, not required, but from personal experience, want to give a shout out to Handtech Market and every other thing that they represent. They're a proprietary firm, so you are looking to increase your capital, you can get an account with them and you can start trading. But right now, I want to go into the chart to give you a bit of a breakdown on what I'm expecting from the market right now. As a matter of fact, I have a trade ready. I have a trade ready that I would want to share with you quickly on Euro, sorry, on GBP in lock because I have my alarm triggered already or waiting to be triggered at this point. We have slow network at the moment, and I'm expecting us to have a push to the downside, and I'm going to explain everything from the 4-hour time frame. You can see these are my parameters. You can take a screenshot before I get into this. My entry is at 211.458. Stop loss is at 211.833, and then the TP is at 210.333. So the mission for this trade is to have a momentum to the downside. By the way, this trading style is a momentum-based system. That means that you're looking to take advantage of intraday market volatility. To do that, you need a specific set of rules that you can follow, allows you to prepare in time. For example, I wake up every single day by 6 a.m. That's why I'm able to see
Your
this.
screen. You can't see your screen. Though.
Yeah, you're here now. Oh, you can't see my screen.
Yeah, you haven't shared it yet.
Alpha, on my end, it says that I'm already sharing, so I'm not sure. Alpha, Lucky, can you see my screen?
Can you unshare and share again? Maybe that would work.
Yeah, just do that, Kenny. Let's see if we can. It's good. Okay, it's up now.
Yeah,
Yeah, it's up now. Yeah.
Okay. Okay. All right. So at the moment, I'm expecting a sell. So the first thing I'm looking to, when I wake up by 6 a.m., I'm looking for rejection, any type of rejection from a particular level, and it has to start from the 4-hour time frame. Now, let me take off all of this, right? I'm going to take off everything on my clear, can have a clear screen, right? So let me take off the alarm as well. And understand I'm rushing through this, so I don't expect you to get it fully. But if you pay attention, you would be able to, grab a thing or two, and you can come. If you need to ask questions, I'll be here to help you through. First thing you want to do is look for rejection. Now, obviously, the week started. This candles open by 22, which is in Nigerian time. By the way, my clock is toggled to Lagos, right? So by 22 is around 11 p.m. last night, and this candle opened by 2. When the next candle opened, we saw a rejection from this level. Now I put cognizance or attention more to the bodies of the candle than the wick itself, right? So when I see a rejection, like for this candle, the 2M candle opened, pierced through this level and closed below the bodies of the 4-hour candle or the 4-hour structure point. Now it closed by 6. That was when I was awake. So when I was awake, this candle was just opening. Now, after seeing this rejection from this level, right, the next thing I ask myself is, okay, where is the market likely to go and why? Because of the rejection, which is my first catalyst for where the market is likely to go, which is to the downside. But why would you go to the downside? Would be the liquidity below, which is a sell side liquidity. Obviously, retail traders would have been taught to see this as as bullishness, right? So this level would be seen as higher highs and higher lows. So we can call this trend line liquidity. Now, because I'm not looking to take the market down completely to this level, I'm looking for a very safe place, almost called the hanging fruit, just like ICT would always say. I think the market can go down to this level, but we can see it first. Now, if that level is my TP, obviously I'll be looking to have a 1:3 risk to reward or a minimum of a 1:2 risk to reward. So if I'm going to have an entry, I would first need to have a structure break confirming that we're going to the downside. Now, to find the structure break, I would have to look at the 1 hour time frame. Remember, with my system of trading, I only need two time frames. The first time frame is the 4 hour time frame. I wake by 6 a.m. to find rejections. When you find your rejections, you are looking to ask yourself, where is the market likely to go and why? Now, the market goes to any up or down direction because of only three reasons. The first reason is liquidity. The second reason is imbalances. And the third reason is to engineer liquidity, which is almost like the less likely reason for market to move to any part of the chart. Now, first thing we are looking for is we've determined the bias for the day because of the rejection and the reason why the market is going down. To confirm that we're going to the downside, we all understand what break of structure is. Break of structure is almost like the definition is a shift in the market delivery, which means that if the market is already creating higher and higher lows, indicating to you that we are going to the upside, a break of structure would give you an indication that, oh yeah, we probably have stopped going to the upside now and we are going to start going to the downside. Now, to look for a break of structure, this is where I come into the 1 hour time frame. Now let's go to the 1 hour time frame. And this allows me to find areas in the markets where I can expect my break of structure to happen. Remember the timing at which this market started. It started by 2 a.m. and then the next candle opened by 6. So we have to look at the time when I'm awake and when I'm looking at the market. When I'm looking at the market will be by 6, the open of this candle. Now, before this candle opened or when it was forming, at the time the opening price was here, that would mean that all of this candle had not formed at the time. If I was looking for a break of structure, this is something I want to teach you specifically. And I want you to take this not just by what I'm saying, but to actually backtest it on yourself on your free time. You have to understand that break of structures sometimes do not always validate from weeks, because sometimes the market will hit a week and then reject, and you'll be forced to call that a break of structure. Let me give you a valid example before we move on. Now, a break of structure, for example, many people would have confirmed this area to be a break of structure. You see this eye? You see this eye right here being completely pierced to this area. Some people would have said that's a break of structure and they would expect the market to go to the upside. Now, but you are seeing here clearly that we have dumped massively, meaning that the break of structure really wasn't a break of structure. Plus, if you want to validate a break of structure, you need two things: that the market has to close above or below the structure point that validates your structure break. For example, in this case where the structure break failed, if we had seen a candle close above the body, which is also the structure, for example, at this level, we see the market close above this level, right? So we have a full-blown bullish candle like this that closed above, body closed above this level. You can call that a structure break. So that is what I personally have studied in my progress as a forex trader, and I've seen that many a times where I have these structure breaks to the bodies of the candle. Now, when this candle was forming, let me take you back. By 6 a.m., I marked out many different areas where I can expect the candle to close below. Now, obviously, we have this body here, one, and we have these bodies here as well. You can use the wicks, but the body have to close below the wicks. So this is a wick close. So this is a proper structure break, not a wick just piercing through a level and not body closing above or below the level. In this case, below the level. After having this structure break, I want to enter price, which is now where you determine your area or your concept of this premium. Very important concept, because for example, the entirety of the forex market or the trading world is so that you can make profit by selling high and buying low. That means that, for example, if you're going to buy the latest iPhone at the moment, it's probably 2.5 million currently. But if you waited 10 years from now, right? With your 2.5, you'll be able to buy probably 4 or 5 of these current iPhones, meaning that you would have profited over a period of time. Let's give a reverse example. For example, you are buying the dollar. Everybody understands that the naira and the dollar is depreciating currently every single day. So it will be smart for you to buy a dollar right now, hold your hard currencies in dollar, and then in the next 10 years, if your projection is right that the dollar will depreciate against the naira, sorry, the naira will depreciate against the dollar, it would mean that your $1 will be worth more in the future more than now. That's the entire concept of the forex market. There's nothing more than what I just explained. Now, for you to understand the concept of discount and premium, you have to look at your daily life. For example, you are going to the market shoe. This shoe costs 50,000 naira. But obviously, you will do a bidding with the person that you are trying to buy it from and say, yeah, I don't have 50,000. Can you take 4.5? Or and the person you guys do a back and forth with the bidding to determine what the best price is. If the two buyers and sellers or the two individuals determine that this price is the best for the both of us, they both shake hands and then they write a receipt or whatever it is, the deal is done. Now, bringing this to the concept of this particular trade, I'm looking to take the market for a sell. That would mean that I would have to profit by selling this market at the most premium price possible. Now, because I want to teach this strategy to someone as dumb as my 8-year-old cousin, which has no interest in forex, I have to make it as simple as possible. For to do that, I have to create terminologies and I have to create it so simple that anybody will be able to learn it. By the way, one of the major problems that many traders, including myself, had for the past 1 or 2 years was how do I fit a specific entry so that the market does not take me out and then goes back in profit, which is one of the most recurring events in the forex market. So what happens is that I've created a system that allows you to know where to put your stop, exactly where to put your profit to the T. That means to the pipette. Now, if you are going to use this same strategy in a different pair, all you have to do is say, okay, where was the rejection coming from? Then you would have to go back to the 4-hour time frame. 4-hour time frame will tell you, okay, this is where the rejection came from. The area where the rejection came from, market always tends to hit that same level before it delivers to the downside. That's why I'm expecting that the market will come back to the same exact level where it rejected from. We have rejected 1, 2. It's possible for us to have a third rejection that takes this market to the downside. That's why most times you see alchemist traders, or it's not science, it's not mathematics, it's not further maths. It's just understanding that is the most discount price possible for you to enter a trade. That's why you see people using 1 pip stop loss, 10 pip stop loss as tight a stop loss. I don't personally believe in using tight stop losses, but I know that the science behind it is that these people have a defined entry to know where exactly the most discount possible price is they can enter a trade from. And that's where the rejection is from. So it's not really a science. They make it look like, SNR and all of these things, but the truth is, it's just the most discount possible area to enter a trade. That's why most of my entries, like for example, I took a trade on NZD USD last week. If you look at that entry, it looks like a sniper entry, but I was not even trying to look for a sniper entry. I was just entering from the most discount possible area, NZD USD. Let's just quickly go there before I finish up with this trade, and then I'm going to pass the baton to the next tutor. Now, this was the trade, NZD USD. All right, so this was the trade. Oh yeah, no, this one was last week then, but this one I wanted to clarify. Now, this trade, if you look very carefully, you will see that we had almost 0%, zero drawdown. Like the market just tapped that entry and then started going to the downside. But look at where my stop loss is. My stop loss was 22 pips above my initial entry. But it's not science. It's not hard. It's just determining where the most discount price possible for you to enter this trade. Once you can determine that, sniper entries will be easy. You will not look at it like a science. It's not a math. It's not hard. Nothing is hard about this. It's just to know that this is the most discount price possible. And the most discount price possible is always, always, always the rejection point. Let's go back to GBP JPY so that I can clear this up and then we can take this trade together. For those of you that will be in trade. Now, where do I enter? My entry will be exactly at this level, 211.0. All I have to do is to put a sell limit there, 211.458. Let me just edit this, 211.458. That's my entry system. That's my entry, right? And then I already said that I want the market to come down to this level. So my TP would automatically be around that level. And if I'm aiming for a 1:3 risk to reward, all I have to do is reduce the stop loss and then target a 1:3 risk to reward. This right here is a 1:3 risk to reward. It's exactly what I'm looking for right now. But to make it more, look a bit more better, you can zoom in or zoom out depending on what you like, right? This is what I'm expecting for this trade at the moment. We have just one or two more push, and I'm telling you, it's going to be sniper entry. But I'm not aiming for sniper entry. You have to understand the idea. I don't buy the idea of using a small pip stop loss, but you this is going to be almost a hit and run. So hit begins to go down immediately. If it doesn't happen like that, it's like NZD USD. And this is exactly why I don't allow or I don't like the idea of a small stop loss. NZD USD last week, this was last week trade by the way. Now I entered here, I entered by 15, which is 3 p.m. Nigerian time, and I expected it to have a very sharp move to the downside by just hitting it. But look at where my stop loss hit. Now, if somebody had a very tight stop loss, this was 28 pip stop loss. But if you have had a 10 pip stop loss, you would have been taken out of this trade. You see? So obviously you have to, check and put yourself in situations for uncertainties. Now, obviously, the market came very close to my stop loss and then just completely reversed. I think this trade took 2 days, from Tuesday to Thursday, 2 whole day. How many people is able to hold trades like that? Anyways, back to GBP JPY. I'm expecting us to push to that area. Once we touch that level, just watch. And I want you to come back on Wednesday. I will be here live with you, and I want you to take a screenshot of this chart right now and show me by Wednesday. And or I was just going to bring it up. But I want you, everybody that is on the chat right now, on the YouTube live at the moment, I want you to come back. We're going to be doing a Wednesday on Telegram. And when I come on, raise your hands, I'll make you speak, and then you can show me the chat. So, anyways, thank you so much for your time. I think the next tutor is on standby at the moment, and we're not trying to take as much time because we know you are valuable and you're valuable with your time as well. I'm VIP. I'm hoping to be here with you next week by Tuesday, bringing you same that or better, because obviously we are trying to be better as humans. And I hope this has blessed someone. If you enjoyed the entire session, please let me know in the chat box. I think that's locked. Is it locked? Or just let me know how.
All right.
Just let me know how you are doing and
Can you hear
what
me?
you think about it.
Yeah,
Yeah, Ken, what's good?
yeah,
Man?
can you hear me? Yeah,
Yeah, I
I'm
can
good.
hear you.
Okay, so my mic is better. All right.
Yeah,
Thank you
your
so much
mic
for
is active. Your mic
the
is
session.
active. You're active. All right, I'm going to stop sharing
All right.
now, and then you can take over.
Okay.
Yo, Ken, are you here?
Yeah, the guy is here. He's here now.
Can you hear me?
Yeah, we can hear you.
Okay.
All right. All right. So basically I want to appreciate each and every one of the tutors that came online today to share very detailed insight on their current trend that are going to be looking for this. And also I was a good session today. I mean, it's not easy. We've always been very much active, and the fact that consistency over time. And I want to appreciate ICT Queen also for coming on to give us words of encouragement to come out here and give us the direction that we really need. Because I know that we need to hear that from her, especially because she's quite experienced in that there's so many things that you can pick up from this. So I appreciate you. And also the are here today on this live. I mean, it's not easy. The fact that you are here today means that you want to gain something, right? And if you pay attention closely, you really grab things that you need to elevate you to your success level, just like I mentioned. Okay, so without wasting too much time, we've already should wrap up our session for today. As you can clearly see, I have a clean sheet for the week. Right, there is not really going on for me, and I had to reach down to this 5. I wanted to handle just the indices, which is SNAS and JPN, but I just added like two extra currencies so that I won't be completely left out from the currency world. So I won't be completely left out from currency world. So let's just do like a detailed breakdown from and we'll call it a wrap. So first of all, on express right here, we had like a very heavy drop from last week. Because this is Monday, this is Friday, Thursday, Wednesday, and Monday. So the whole week was very bearish. As you can see, this is the reason why we got in from this top down to the whole week we have been selling this one. So I'm reason for myself, I mean, enough just from structure, is that we are heavily bearish, right? And I'm still expecting more pushes to the downside. Currently, we are expecting price to this just liquidity, and you can see the structure here. We have this median high where we have what's got our entry push price downside. So everything that's going on in our internal liquidity. So currently, like you can see, we got hit our TP, right? I initially intended to take my TP out from this low. Now it's just to push price to the downside here. So if we are currently targeting somewhere around here, then we need to stand our structure to be able to take the direction to the downside. So like I said, everything here is now liquidity, right? If you're not entering properly, you are going to get what bonds. You're going to get liquidated on this right here. So basically, what you see here, you have this sweep right here. We have a great sweep right here, and we have to the downside here as well. We have this sweep to the downside here. So right now we can see that this level is very valid for the continuation to where price was currently heading to. As you can see, we have this PY right here. So this is internal setup price because basically we are moving from the top towards the sales liquidity, and if this level is going to be tapped, then we can also definitely take our shots from here towards the downside, just to follow in line with this last momentum. So okay, so this is currently the setup on here. So we are following through from what this bearishness towards to strip out this liquidity. So that's our next experience. So on AUSD, this is one currency I'm handling. So let me quickly check this. As you can see, initially I was expecting position from this point, right, from this point right here to the top side. But if you notice now, we've already had a sweep and this from the top. Like I said, already had entries here. So definitely this liquidity, this is not going to hold because it's one of the things in range. It's one of the things in range. If we are going bullish the range, then it's either we take our reversal to sweep out the low, or the reversal doesn't happen. We just take down to that level to continue the that. So this should have been a position on. We have a reversal entry from the top. So we are looking to take out the liquidity on the sell side. So after that happens, after that happens from points, you see that we had the flip, right? Same level that was supposed to take us what in our supposed to have some already flipped towards the bearish momentum, and that's the price of the price of going down. So we want to determine our range high time frame 4 hours right here. So currently, let me see what this. So currently now we have our range still see that this was the level that we've taken out right here. So range here now is this high and it's low right here. So what we're expecting now, one of the things is now we use this range to sweep out to out to the sell side, or we come down to this level to take our buy side. Now, in the range right here, like I told you, a lot of things, we are getting our entry from this point to this level, or we're coming back to this level to take our side. So far, so good. We are still very, as you can see, the momentum is right. So we're looking for a reason to continue that bearish momentum. When it's minutes to mark our POI right here, this should be our POI. So I'll be looking to see the price coming to this level to react to the downside. And this now is our inducement. The sweep and was pushed down. So this is my outlook on 80 ready to want something like this to happen and we'll take our downside side. So let's keep it USD. We'll talk about NAS. So see, NAS moves same way as SPX. I didn't have this since Friday. Same price. So to get into this level, we're getting into this now. So we could as well still expect that to still happen. Whereas we got the early sellers from this point and take it to the downside, just as we expect on SPS. So this will still be valid setup. Like, see why we even got it from this one inside. Price actually go 5. Yeah, that's why I was like this. But let us focus on this 5 this week so that we have a less known and more focus in our stops. Okay, so this one, so it's the same thing. I already have set up since Friday. As you can see, this was the points of my interest. And the fear was to get that level. This time, this. So once we get there, you can see that all our indices are aligning in the same or in the same direction. So we have SPX applying to the downside. We have NAS as well applying to the downside. So here you can see, and also we have that applying to the downside as well. So let's see. We already highlights around this level so that should our attention going and get to that point. So not the least, Euro USD. So you can see USD has been dropping since especially the same way that the whole so far we've not taken on the structure. As you can see, let me clean up this. So far we haven't taken out the structure. You can see this is our correct setup right here. The other which were anticipating was this to be taken out. But currently, if we want to still we expect this to happen, then super liquidity, then right. But right now we are still bearish, right? So we have this happen. So we can still ask for more. So if this level doesn't get broken, then we cannot take more sell to still this house where currency and give us reason to want to sell in the coming weeks or for right. So a lot of people are sell limits around here now, which is very obvious because we anticipating that level to get swept out, take out the order, go in direction. So we could possibly see a re-entry at that level. Sure. So I'll give us reason to sell on the as if price is not going to be what's going relations. So this is exactly what accepted on this. So five area is still on skeptical, but we have what we have area in play, we have NAS in play, and we have the pound 225 in play. So that this is how I want to put. And too much. It's not very much, but let's see how it goes. So I think that was it. So we'll rendezvous on Wednesday. Let's rendezvous on Wednesday so that we can be able to check. Um, Jami Oyetunji. I think you can't hear me. How? Okay. Lucky.
All right, guys. So that was a good section from all of the tutors present today. We had different pairs to look at, starting from gold to GBP, JPY to NZD USD to AUD USD and the likes of them all. All right, guys. So I'll see each and every one of you tomorrow in the Telegram live section where we'll be looking to have solid trade ideas and market opportunities to trade and make money. So I want you and your friends and family to be there and let's make money together. That's being tomorrow, right? All right. So today we'll be calling it a time. Thank you very much, guys, for being here. On it was a good thing to have you guys here. All right. So take care, guys.